On this video, I'm going to be showing you guys my millionaire secret strategy when it comes to risk management. I kept this strategy for students in Godlove University only, or for my VIP students only, but this is the first time you guys are also just as important as my VIP or my GU students. So this is the first time I'm going to be bringing it to the internet, and this is the first time someone is actually showing this style of risk management on the internet. So how does it work? Let's just come to my screen, and I'm going to quickly show you guys some trades which I took and how I plan to be able to manage that particular risk and how you can be able to do the same. So if you can see on my screen, I actually have some trades up and running, but these trades have been running for almost about 2 weeks. They were swing positions. You can see I started here. I'm already up with almost about 600 pips. You can see that that's a swing position, right? This position has been open for about 2 weeks, and with a 0.1 lot size, I'm already making about $500 on one trade. That's just to tell you, even with your 0.1 lot size, you can still make millions in the Forex market. You can still make a lot of money in the Forex market. All right, so with this particular trade, this is how I manage my trade, or this is how I plan to manage my trade. Let's step down to the 1 hour time frame, and on the 1 hour time frame, let me just zoom to the end. Okay, let me minimize this. Good. There was a trade I took with Godlove University students somewhere here. That trade was on Monday. If they can remember, I got in somewhere here. This is where we got into the trade. Our stop loss was somewhere here, and we were going for our stop loss was 50 pips. So 50 pips was around here, and we're going for a risk to reward of 1:2, meaning our take profit was 100 pips away, or 150 pips away or so. So our take profit was somewhere here, and we ended this trade with 3% of our account. How did we do it? All right, so this is how you manage risks when it comes to this style of risk management. If you have a signal, you have to already predetermine how much you want to risk on that particular trade. Let's just say I want to risk 1% per trade, which you should never risk 1% on any of your trade as a beginner or even as a pro trader, right? So taking that into consideration, let's just say I want to risk 1% per trade. So I have a signal, I say, okay, I want to get in somewhere here. What I will do is I'll open 2 trades. Right? I'll open 2 trades, and each of that trade will be having the same risk, and one will be going for a risk to reward of 1:1, and one will be going for a risk to reward of 1:2. This is powerful. Please stick around to the end. This is powerful. This is going to change the way you trade. This is going to change the way you manage your risks, and this is going to actually prevent some of the times where you have a trade, the market goes in your favor, and then you see the market goes against you and you lost even what you've made. I know that sucks. So the purpose of this video is to be able to cure that, right? So if I have a signal somewhere here, I'm going to have trade number 1. So I'll call it trade number 1. So let me just call it trade number 1, right? So we're going to have trade number 1, and we're also going to have trade number 2. Trade number 2. So we're going to have trade number 1 and trade number 2. Trade number 1 is going to go for a risk to reward of 1:1, and trade number 2 will go for a risk to reward of 1:2. Meaning, if I'm risking, let's just say I'm risking 60 pips, 1:1 is just going to be 60 pips. So our target is going to be 60 pips, right? So my target will be somewhere here. So our TP1, that's why sometimes, even if you are in my free Telegram community, if you are not in my free Telegram community, check the link below to join my free Telegram community. Sometimes in my free Telegram community, you see I'll send a signal and I'll say TP1 and TP2. TP1, good. Then I'll still send another signal and I'll say TP2. That's what it means. It means you actually have to open 2 trades. If you want to use this method of risk management, you need to open 2 trades. This is, you entered into the market somewhere here. Let me make it so that you guys can see it clearly. So this is going to be our entry. Our entry is going to be here, our TP1, TP2, and here we have our stop loss. Voila, we have our stop loss. Let's just say stop loss, right? We have our stop loss, we have our entry TP1 and TP2, and this is what happened. Immediately you decided, okay, you want to buy. What I want you to do is to open 2 trades. The first trade, the take profit will be on TP1, and the second trade, the take profit will be on TP2. How do you manage this trade? As soon as the market goes in your favor, I don't want you to trade your stop, I don't want you to do anything. Let the market run. If the market hits your take profit, which is TP1, obviously the first trade is going to be closed, and let's just say you are risking 1% per trade. So you've already made 1% of your account because the trade will close as soon as the market hits your TP. At that particular point where the market hits TP1, what I want you to do is to remove your stop loss and put at break even. Simple as that. All right, this is the risk money management. I call this the tortoise. You know a tortoise is slow but sure. All right, so I call this the tortoise risk management method. So as soon as the market hits your TP1, take your take profit or your stop loss level from the next. Remember, TP2 or the trade which has TP2 is still going to be open. Right, I'm going to show you a live example how to do this. As soon as the TP1 is closed and TP2 is still, the trade with TP2 is still open, take your stop loss on TP2 and put at break even. At that point in time, see what happens. At that point in time, even if the market has to move from this point and go against you to trigger your stop loss, you will come out with nothing at the end of, or you come out as a neutral trade. It was neither a loss. No, again, it's just a break-even trade. So even if the second trade that is still open, the market has to retrace, boom, and hit your stop loss at break-even. That trade is going to be break-even. And remember, the first trade, you already made 1%. Doesn't make sense. The first trade, you already made 1%, and the second trade ended at break-even. What if the market continue going in your favor as the same as what happened here? You can see TP1 was hit, we got out of the trade. The market continued going in our favor, and maybe about 4 hours after that, boom, TP2 was hit. So TP2, so long as immediate TP2 is hit, we've just made 2% of our account. So that's 2% on trade number 2, which has TP2 risk to reward of 1:2. We've made 2%. And on the first trade, which was originally closed, we made 1%. So in total, on that particular trade alone, you made how much? You made a total of 3% of your account. Can you see this? You made a total of 3% of your account. That's why you used to see some people, they'll pass a profit account by just placing 3 trades. They just assume your profit is having 8% phase 1 target. With just 3 trades, with just 2.5 trades even, you'll be able to pass that profit. It's not magic when you guys see me passing profits like this, some in 1 day or some in a couple of hours, because of something like this. If all those 3 trades go in your way, 3 trades, just need to place 3 trades using this method. And if all those 3 trades go in your way, my friend, you pass a profit with just 3 trades. It's not magic. First one, you made 3%. Second one, 3%. Third one, you just made 2%. You've already passed phase 1. That's the magic when it comes to this risk management strategy, or with this strategy of managing your risks. So it's simple. As soon as you have a point where you want to enter into the market, if you are risking 0.5% per trade, then at that point in time, you open the first trade with the risk of 0.5%. The second trade will have the same risk of 0.5%. Remember, the stop loss level is the same. So both trade number 1 and trade number 2 all have the same stop loss. That's why if you see signals like this, where I say buy, maybe go or this, you see TP1, TP2, but stop loss is just 1. Meaning all the trades are using the same. They're all using the same stop loss. Does it make sense? You only lost about 2% of your account if the market now goes against you and trigger your stop loss. At that point in time, you lost 2 trades. But now that is already covered, because this strategy, you only do this when your strategy is at least 50% profitable. All right, when your strategy is having an accuracy of at least 50%. With most strategies, even if you are just toasting a coin, you'll be lucky enough sometimes to have a strategy that is 50% accurate, right? With a strategy that is 50% accurate, you always win. You always, even if it's 40% accurate, you will still be able to go break even. If it's 40% accurate, you go break even and you start making money when the strategy is at least 45% to 50% accurate. So you need to be able to have that in mind. Use this style of risk management. If you have a good strategy which is at least 50% accurate, or let's just say 40% accurate, and you'll be able to see if the market goes at it. I know this is very, very painful. When the market goes against me, I'll be able to see that money. I'm already counting. I'm already planning on what I'll do with that money. And boom, you see the market goes against me, trigger my stop loss, trigger all those positions. No, this method is going to help you to be able to protect your positions. So with this strategy, please go back and do as many backtesting, backtest as much as you can using go back to your demo account. If you have, no matter the strategy you are using, remember this is irrespective of the strategy you are using. Even if you are using a moving average strategy, a support and resistance, trend line trading, use this method. So long as you already have a signal to sell, you just buy, you sell 2 trades. The first trade, remember this is if you are having a risk to reward of 1:2. What if you are even having a risk to reward of 1:3? Meaning you open 3 trades. The first trade will have a risk to reward of 1. Let me show you guys. Let's just assume I had TP3. This is very important. TP3 would have been here. Let's just say TP3 would have been here. You guys will be able to see how you can be able to make 6% of your account in 1 trade alone. All right. So this would have been TP3. Good. So TP1, TP2, TP3, entry, stop loss level is the same. So you got into the trade. Let's just say you can see this market, even if you had TP4, TP5, TP6, it would have just keep going in your way, and just 1 trade alone, you would have made about 12% of your account. Can you guys see this? So let's just assume we ended on TP3. The first trade would have hit our take profit. TP1, that's plus 1%. All right. I'm going to put that on the screen so that you can see the math. That's plus 1% on TP1. TP2 is hit. That's 2% of our account made. That's plus 2%. We've made a total of 3%. And TP3 is made. Remember, from entry to that, that's 3% plus 3%. That's 6% of our account we've made on just that particular setup. One setup alone, we've made 6% of our account. And what even if the market had to, let's just say we got to TP2, right? We got to TP2, and at this particular point in time, remember, as soon as we hit TP2, our stop loss would have been somewhere here. Would have gone to TP3, take our stop loss, or as soon as we hit TP2, would have removed the stop loss which is on TP3 and put somewhere here. And see, the market retraced, and our stop loss was still safe. We're still safe. Meaning, even if we're triggered somewhere here, would have been at break even on TP3 and still come out of the trade with plus 3%. Can you guys see? Just one setup, you made 6% of your account. So when you guys see screenshots, when somebody's passing a profit from account with just one setup, that's not magic, bro. That's not gambling. The person knows what he's doing. He has incapable skills when it comes to risk management. His risk management tips are top notch, and you should be able to use the risk management strategies like this. Go back to your demo account and practice this as many times as you can, but at least you must have a risk to reward of at least 1:2 and above. Even if you are targeting a risk to reward of 1:4, 1:5, just use the same technique. As soon as TP2 is hit, as soon as TP1 is hit, make sure TP2 is still going to be open. The trade with TP2 is still going to be open. You remove your trade, you remove your stop loss, and you put at break even. All right. Immediately TP2 is going to be hit. The trade with TP3 is still going to be on. So you remove your stop loss and you put at the same level where we had TP1. So at that point in time, your stop loss will be here, the current price will be here, and you are giving the market room to breathe. You just keep doing that over and over and over and over, and you don't care even if the market has to go against you or not. That is trading in peace. That is trading with confidence. So go back, please, guys. I want to know your thoughts on the comment section. Go back and backtest this technique on your demo account and come back on the comment section and let me know. Post the results of using this particular technique of risk management on your Instagram. Tag me. Let me see how you guys are doing with this. And if you have any question about this strategy of risk management, this is the first time I'm seeing it on YouTube. This is the first time I'm bringing it to YouTube. If you have any question, drop it on the comment section and I'll do my best to reply to all the comments on this video. If you want to use the same broker I'm using, the same pro firm I'm using, or use Paytrex Pro, which is the most viral Forex robot, check the links on the video description. And if you want me to mentor you one-on-one, check the link on the video description to enroll in Godlove University so that I can be able to mentor you from A to Z when it comes to Forex trading. Click out this particular video to check a strategy that you can be able to use in Forex trading, and with this risk management, money management strategy, you can use on those strategies. Click this playlist to check other videos on that playlist, and if you haven't subscribed, click it to subscribe to the channel. See you guys on these other videos. Peace.